Let's bring in our expert panel. Ivan Feinseth, Chief Investment Officer at Tigris Financial Partners, and Hatem Dhiab, Managing Partner, Gerber Kawasaki Wealth and Investment Management. Thank you both for being with us. Hatem, I'll start with you, because what we're seeing with Amazon is it's clearly under pressure. After yesterday's report and the guidance that it gave, it just really is out of favor. In fact, when I was looking at Amazon, it's just a real laggard. It's down 8% today, 2% for the week. For the year to date, it is an underperformer. It's up just 3%, while some of the other names are killing it. What are we missing on Amazon? Is it a buy now?
We're buyers. I mean, it's a really tough start for Andy Jassy, his first earnings call as a CEO of Amazon. But frankly, if you dig deeper into the numbers, they didn't do as well on their retail business. But if you look at their AWS business, is up huge, up almost 50%, 40%. If you look at their other services, which is advertising, is up almost 90%. So really, like after the pandemic, we saw digital advertising and we saw cloud really are huge, biggest winners. And if you look at all the other FAANGs, so Amazon here is a big buy.
Yeah, it makes sense. I mean, we actually noted that Amazon Web Services had done well, and it's clear and evident that, particularly from Google, for example, Ivan, that we saw advertising, digital advertising is back. Year to date, as I look, Facebook is up 31%, Google's up 54%, Microsoft about 30%, but Amazon just 3%. It's such a miss, at least for now, but you know, Hatem is saying it's a buy. Is there a name on this list that you love?
I love them all. I love Google, Facebook, Apple, Amazon, and Microsoft. And I think that Amazon is a screaming buy here. Hatem is right that the disappointment in online sales overshadowed the great results in digital advertising and cloud. And Amazon continues to develop and invent new ways to serve a very large customer base and continue to make money, and that will be the case. And yes, the post-pandemic has brought people from shopping online at home back to the stores as people want to get out. And the majority of commerce does take place, retail does take place in stores. Shopping is still a social experience. But
yeah, so Ivan, you said you love them all. You love them all. So, and the digital story, I guess, goes to all of them. I saw another story about Ray-Ban glasses, that Facebook may have Ray-Ban smart glasses for us to take a look. I mean, that's just one little tidbit that's fun to discuss. But I mean, we have the overhang of all things antitrust and concerns with that. But you said, Ivan, that you like them all, right?
Absolutely.
And Hatem, how about you? I mean, do you like Amazon more than others? Because you did say buy Amazon. What about some of the other names here?
I mean, we were impressed by really Google's or Alphabet's earnings and Microsoft. I think those are really our top buys right now. But frankly, as a consumer, I'm scared by Facebook's vision. I mean, I read the essay from Zuckerberg about this metaverse and his Ray-Bans, and obviously what they're trying to do is they're trying to divert from the antitrust and everything that's going on with Facebook's influence. So I see that a headwind for Facebook. Listen, they doubled their profits year over year, so it's obviously a great business, and they're doing really well. Over 3 billion monthly active users. Basically, half of the globe uses them. But ultimately, I think there is some antitrust worries coming in, and we'll have to look at that as really a problem for them, probably.
And Hatem, what about the pricing here? I mean, I know you said Facebook, you're worried about the vision of the company overall, so it doesn't sound like you're too enthusiastic about that one. But you also mentioned Google and Microsoft being interesting to you as potential buys. These stocks have hit all new highs this week and have had quite a run. You still think there's more room to the upside for these names as well?
I mean, everything is expensive. But relatively, I think these big tech numbers, these big tech companies are a little bit cheaper relative to the other tech names in the market. I think they're just really core holdings for every portfolio at this point. And if you want to participate, you know, we're talking at these companies being 20-25% of the S&P. So if you want to participate, you got to own them.
What am I missing here, Ivan, as I look at the group? And As you said, you like them all. And we have a reopening underway. Folks are feeling good. I had a great conversation with someone from the conference board. She was talking about confidence and consumer spending, and consumers are feeling great. I mean, just is everything all systems go, Ivan?
Absolutely. The underlying fundamental trends are very strong for the market, and the market will continue to go up. The other thing is the Fed is still on the side of the bulls as far as the stock market goes. So you have all of these factors, and you have the fact that the reaction to buy the dip has been so many times reinforced that it's going to continue to be the reaction, and it's going to really minimize sell-offs. Normally, we could get 1 to 2 corrections of 5 to 10% a year. We've gone for almost 2 years with barely a 5% correction because there's such a huge amount of money on the sidelines, and this buy the dip reaction has worked, and it continues to reinforce the buy the dip. So that will, I think, minimize any major sell-offs in stocks.
And now, Hatem, what's the broad-based thought there for investing over at Gerber Kawasaki?
I mean, we're looking at rates, right? Like, I mean, as soon as rates remain this low, the market will keep going up. But eventually, we're going to see a repricing. We're going to see things change a bit. There's a little bit of a worry against Delta, but this variant really helps the FAANG and helps all digital businesses. So there is some macro stuff that's we're looking at. But ultimately, I think what Ivan said is right. I think we're looking at markets staying strong like at this time.
Yeah. It's great. It's great to chat with you both, especially when we look at these FAANG names that people love to own, and they sometimes own them just in big indexes. They don't even know they own them because they're such a big part of the major indices that we follow so closely. Thank you both very much, Ivan and Hatem. Thank you. Ivan Feinseth, Chief Investment Officer, Tigris Financial Partners. Hatem Dhiab, Managing Partner, Gerber Kawasaki Wealth and Investment Management.